Hey, this is Sasha. Thanks for joining me in today's video. And what I want to share with you today is why most options education is wrong. And probably the things you're listening to and reading is not necessarily correct when it comes to trading options, at least when you're first getting started. It's because you just don't know any better yet, or you don't see the bigger picture. So I'm going to share with you some tips and insights here on how to really look at the bigger picture of options and why a lot of the education out there is wrong that you're probably listening to. So stay tuned. I'm going to share with you this insight. All right, so when it comes to option education, I've been dealing with options for quite a long time, and I typically see beginners make the same mistakes over and over again because they get attracted to the options by buying single calls or buying single puts. You get a single call, you buy a call when you think the stock is going to go up. You buy a put when you think the stock is going down. And that's the typical approach that most people start out with, and that's the typical education. You'll see a lot of that education out there. Unfortunately, it's not the right approach, but many people teach this because it's the easiest. You can suck in the most amount of people because most people are just getting started, right? So it's easy for them to understand. They come from a stock mentality where if you buy a stock, and then it appreciates, you make money. You sell a stock, it depreciates, you make money. So if you're short selling, that is. So that's the typical concept, and a lot of options education out there teaches it in this way, and it's completely incorrect. And I used to go that route as well, from just me trading in this way until I knew more and better. And options really, when you break it down, it has a way deeper construct than just that simple concept of buying and selling like you do a stock. So let me share with you some insight. One of the reasons I'm doing this is because we do have a course set up to launch for the beginner options trader. So Options Mastery, this is version 2.0. We've reworked the course from the ground up. So in this foundation course, it's going to be 11 hours long of in-depth options education and the real way to trade options. They're giving you the logical, critical way to understanding options, not just, hey, get rich quick kind of scheme. This is the real masterclass of a foundational concept. Now, we're not going to get into complex spreads, but what we will do is give you a nice solid blueprint. So that's going to be located on my website here at tradersfly.com. You can also go ahead and go to the course website, which is where you'd be purchasing it from, rise2learn.com, and then we'll link all this up, and you can just click it and then be able to purchase this. And as far as it's coming out November 25th, as far as all the content and material, we're going to be releasing the first batch of videos November 25th. Then December 2nd, and then December 9th. So, and you'll be able to get a $50 off coupon here, Black Friday, kind of Christmas thing going on. So you'll be able to do that on the promotion. Just make sure you get on the newsletter list, which you can do by just getting any of the freebies on our Traders Fly section here and downloading them when you get these pop-ups, and you put in your email address and you can sign up. All right, so with that being said, let's go ahead and take a look at understanding why it's incorrect. So let me just give you a concept of, let's look at, let's say, Boeing, for example. Most options education, when you go in and let's say you buy a stock, it's geared around just this simple movement of a stock. You buy it, a stock goes up, okay, you make money. So this is that concept right here. So here's the stock price. Okay, this is the profit. Okay, so if you make money, here's your profit. Okay, so that's profit. And this is your loss over here. So this is kind of the way that this works. And this is your zero line. So if I buy the stock at this point and I'm over here, I just line it up, okay, at 270, I would make that amount of profit, right? And if I reduce the share number, let's say 100, obviously the curve is less steep, but I can stretch these so you can see it a little better. Now what you can see is basically as it goes up, I make money. In this case, it makes $863 and so on and so on. And if it goes down, you lose money, right? Basic concept. So options education is taught along the same ways. Most people teach it, hey, well, if you want the stock to go up, you go ahead and buy the single call. So here it is. Here's your single call. So if it goes up, okay, you make money, okay, right there. So you can see it goes up, you make money. If it goes down, you lose money. But you do have an additional curve here, which is this time decay curve. So this is kind of your line at expiration. And the time is a problem. So you're actually losing $14 a day as you hold on to that. If you're dealing with just the stock, you don't have that. You don't have this gamma, theta, vega. In options, you do. So what people don't recognize is you're losing time. So if this thing does not move, every day I move that time forward, even if it does not move, I'm down $211. That sucks. So you'd be losing money. So basically, if the stock stands still, you lose. If it goes down, you lose. If it goes up only a little, you still lose. You have to have it explode quite quickly to offset the time difference or the time problem that you're going to have. So typically when we trade options, as far as people who are more knowledgeable as you get deeper into the education, you'll do spreads. And I'll show you that here in a second. But just to show you the example of the put side, this is the other way that people show you how to trade options, and that is, hey, why don't you buy a put if you think it's going to go down? So what people do is, hey, you'll buy a single call or you'll buy a single put if you think the stock's going down. But that's a losing proposition because, as I showed you, stock stands still, you lose. Stock goes against you, you lose. The only way you make money is if it goes up, and it has to go up enough to offset the difference. So how do you make money in options? How do you make money when you're trading options? This is not, you could do this, but with a smaller part of your account. The better approach is doing things like spreads. And I have a handful of different spreads where the time decay here, it's not negative, but it's actually positive. So show you an example of a couple. Let me see if I could find a few easy ones. Here is Apple. And what I've done here is I've went ahead and sold a few spreads on this left side. So what this is selling one and buying one. So think of it like, let me go ahead and show you the call side first. So here I've bought, let's say 6 calls. That's fine, right? That's the basic concept. But I've also sold 6 calls against it. So I've really sold first and bought some protection for the calls. That's the way you do it because you're protecting what you're selling. That's the approach. It's a whole different mind shift here, okay? And that's kind of what we'll be talking about when we get into a lot of this course is the concept of basically selling. The real way money is made in options is through selling. So what we do here is we sell first right here, but the problem with selling is you have unlimited losses to that upside. So how do you offset that? Well, that's where you buy the options, and then it creates kind of this vertical spread. Now, I've done this twice with these other contracts here, the 2, and you can see this one I've made, paper money trading, but just to give you an example, this is what I use for mentoring and coaching when I deal with people. $58 there, and then $238 between that side. And then if I stack the puts, it's no different. Here I've got the other side, the left side, and then combining it, you create kind of this iron condor strategy, which basically you're making about $26 every single day as that white line gets closer to that green line. And I really don't care if that stock kind of stands still, moves up a bit, or moves down a bit, as long as it's kind of in this range. Think of it like a goalpost. As long as I kind of keep that goalpost there, or like Pong, the game, as long as I keep it in that range, that's all that matters to me. So anyways, in this case, with time, you'll see that white line continue to get closer and closer, and boom, and then eventually expire. Now, do you have to take it to expiration? No, you can hold it for a day. You can hold it for a minute. You can hold it for 2 days, 5 days. It's up to you, but this is the smarter approach because you have time working in your favor. Now, you could create all kinds of different constructs or spreads. So let me see if I could find a few more. Like here's Amazon, also a little bit more bullish because you could see I've lifted one side over here. Let me show you, let's see, diamonds over here, DIA. This is more of a calendar spread. So you can see this one works a little bit different, but still I have time working in my favor. That's the key here, right? DKNG, this one's a losing position, but I'll still show you that. So you can see this one is a little bit more of a butterfly spread. That white line's going a little lower due to a volatility problem. But you can see the spread is still gonna look at making me $40 a day in the theta. Let's go to Facebook here. So here is Facebook. This is similar, iron condor spread, a little bit more bearish in this case compared to some of the other ones. But still, nevertheless, it's a spread. Here's GLD. Let's see what we got on gold. I think it's a couple of things. I've got 2 things. One of them is a diagonal, so you can see it's kind of like a bullish one. And then the other one is a butterfly right here, which is not working out as well. But that's a longer form for December 18th. So if we continue to move in that direction, that should pan out because it's a little bit more bullish. Let's see, Microsoft over here. This is just a standard vertical, so I just have a vertical on its own that I just sold, which is the put side. So you can see there's a lot of things here. Let's just do one last one. It's all centered around spreads. Here's NVIDIA on the butterfly. So a lot of things are centered around spreads, and very few things are about buying single calls and buying single puts. Unfortunately, that's kind of the education that you typically will see in most YouTube videos or just basic option education, because it could be for a few reasons. You might be wondering why. Number one, it could be that they don't know better. Number two, it is more complicated. So sometimes if you don't know the basics, then you can't move forward. But typically what you want to do is you want to get to the spread part, learn about spreads, because that's where you can have money working in your favor, the time working in your favor, and that will help you definitely use those spreads to your advantage. So that's ultimately the goal and the key, and that's what we're really doing here with this course here that's being released. So we worked our Options Mastery version 1.0, which was just really a 3 DVD here, which you see right there, which will be replaced here soon with the video. But we went to version 2.0. It's 11 hours, 36 videos, and a ton of content. So definitely, if you're interested in this, pick this up, and you can go ahead and check it out on our website at learn.com. And you can also do that on our main website at tradersfly.com. And that'll definitely take you in and give you a good detailed foundation on options, on even here as we get into the final batch, buying vertical spreads, selling vertical spreads, how those things are constructed, how the Greeks make you money, how to set up an iron condor, how it makes you money. We're just talking about basics here. We do have more advanced and detailed strategies for or details for kind of an iron condor and butterfly. Those courses alone are like 20 hours long because there's so many little nuanced components to them. There's different types of butterflies and iron condors, but at least this course will give you a solid foundation. So if you're new to options, just getting started, you want to learn the right way of doing it, this will give you the critical things that you need to moving forward in your options education. Or if you just want to know and understand, hey, what is this all about? Sometimes it's easier, hey, why don't I just take a course rather than, going into this direction full force and then realizing it's not for me. So this course will help open up your eyes and mind to what it's all about. And check that out on our website. There's a lot of good stuff on it, and it's going to be launching November 25th, so coming up very soon. And you can get on our newsletter list by going to the freebies section over here on tradersfly.com, or even in the links in the description. So thank you so much for joining me. Hope you have a chance to check out that course, purchase it, really get a good foundation on options the right way, the real way that you should be trading options. Of course, can you still do calls and puts, singles? Sure, you could do that, but it's not the wisest approach. So anyways, thank you for watching the video. Thank you for spending your time with me. Remember, there's more to life than money. So do what you love, contribute to other people, but most importantly, live life abundantly. I'll see you next time in the next video.